Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Google stock, okay? So I'm going to do a fundamental analysis and valuation, okay? So I'm going to find a fair price. So leave me a like if you find this video interesting. I just ask you that and subscribe to the channel. Let's begin. Alright guys, so before we start, I would just like to tell you that have you seen Spotify? Look at that, plus 10% yesterday, okay? And why is that? Spotify stock surges after Goldman boosts target to $280, okay? So basically, Goldman Sachs came out with my same numbers, okay? Because I did this analysis 3-4 days ago. And I said that the fair price of the stock was around $273, okay? So they said $280. The difference is that they have influential power and I don't, okay? Anyway, we came out with basically the same number, okay? So this is even to show you how at the end of the day, those kind of fundamentals valuations are based on something real, okay? It's something that analysts do. I'm quite happy with that. Basically, I told you the same stuff 3 days before them and the stock went up, okay? The market was weak, but the stock went up 10%. So I hope some of you probably just saw the video, and if you did, I'm happy about you, okay? Anyway, let's not waste time and let's get straight into our real analysis, okay? So Google, we have two ticker symbols, okay? So we have GOOG and GOOGL, okay? So there are two different kind of stocks. I'm gonna explain you later on why is that. So Google business, everyone knows Google, which is basically the stock is called Alphabet, but I'm gonna call Google, okay? Because everyone knows that. This is the official report from 2019, and let's go to take a look at the business of Google, okay? So how Google makes money. Now, in 2019, Google made $161.8 billion, okay? So, most of them are from Google search and order. So here, basically, you have Google properties. And those Google properties, you have 98 billion from Google.com, Google Maps, Google Play, okay, all those kind of things. Plus, you have YouTube, which is Google's property. And from YouTube ads, Google is making 15.1 billion, okay, in 2019. So here we have the total of Google properties, which is 113 billion. Plus, we have the Google Network members properties, okay? So here is where you find AdSense, and basically all those things where you need to become a member of Google. And 21.5 billion, okay, from this. That gives us a total of Google advertising, which is 134.8 billion. And plus we have to add the cloud business of Google, which is roughly around $9 billion, and plus others, okay? 17 billion, and that gives us a Google revenue total of 160.7. Plus we have this one, other bets. So basically Google, for a very small percentage of their business, they like to invest in new startups, in new companies, very small one, but with a very, very high potential, okay? So basically they have just the 0.5% of their total revenues based on those other bets. Very small companies that they think they are interesting for the futures, okay? So probably why not? In one of those companies one day came out the new YouTube, okay? Or something like that. And they like to invest in those little things because they like their potentials and they think that probably one of them, a lot of them are gonna fail, but one of them probably is gonna become the next big thing, okay? And hedging gains, so basically there is derivative hedging. At the end, we get this total 161.8 billion. So this is the business of Google, okay? Most of it is based on Google properties and Google Network members properties. Okay, so Google Network. When it comes to Google revenues, guys, it's absolutely insane. Okay, look at that. This growth rate is incredible. It's absolutely incredible. It's been basically it's an average of a 20% each year. Okay, absolutely insane. And look at this parabolic curve. Right now what happens is that we are reaching very high numbers, okay, 160 billion in revenues and around 45 billions each quarter. Okay, so as always, the growth rate is becoming is still very high, but the real question is gonna continue to be that high even in the future? Okay, because right now we are stable near the 20%, 16, 17. Okay, we are going to the 15%, 17%. Okay, anyway, this is the question. How much can Google still grow? Okay, it's a wonderful company, but of course the growth prospects are different from 10 years ago. Okay, anyway, we never know. It's something that we presume. Okay, we say, well, probably it's not going to continue to increase at 40% every year, but why not around 15, 16 for the next 5 years? It could be. Okay. When it comes to margins, we have a net margin that on average is standing near 22%. Okay, so basically look at that, 21, 22. We had a downside in 2018, but this was just because they changed something in their accounting systems. So basically some leases they had to consider as liabilities, and that makes in 2018 the revenues boom went down, and that's what it is. But overall we cannot consider this. We take as an average around 21% in net margins, okay, which is very great. That gives us a net income that is growing as well. Okay, now here you see this peak down, but the reason is the one with accounting system change. Okay, so nothing to worry about. When it comes to briefly see the balance sheet, just to have an idea in mind, we have in 2018 an operating income that gives us an operating margins, as I told you, of 21.15% and the net margin of 21.22%, okay, which is very great. The current ratio is very high, 3.66, and the total assets divided by total liabilities is very high as well, 3.92, okay? Is just second to Facebook, and after that it's better than Microsoft, it's better than Apple, and it's better than Amazon, okay? Very solid balance sheet, okay? One of those companies that basically are like impossible to go bankrupt right now, okay? Absolutely out of any thoughts about bankruptcy, okay? The debt to equity ratio is the best in the list, even better than Facebook. We have 8.25% debt divided by equity, okay? So absolutely solid company, no doubts about that. Here, just to make you understand graphically, well, probably you can appreciate more the difference. We have the total debt in 2019, which is 16.8 billion. But we have cash and cash equivalents of Google, okay? So basically this is the liquid cash and cash equivalents, and they are 170.2 billions, okay? So basically this is the difference graphically, okay? So this is the total debt and this is the cash and cash equivalents. Look at that, okay? This is just the 14% of this, meaning that they can repay the total debt when they want, and even up till more than 6 times, okay? Because they have more than 6 times in cash and cash equivalents comparing to the debt. So basically, guys, the balance sheet of Google is something that you cannot push down, okay? It's incredible, absolutely incredible. Now, I'm gonna explain you why you actually are finding 2 different shares, which in reality they are 3, but one you cannot buy, okay? So basically, in Google, we find the Class A shares, which is GOOGL, the Class C shares, which is GOOG, and the Class B, which we cannot buy it, okay? Now, who owns the Class B? The founders, okay? Around 6.75% of stocks are in Class B and are completely owned by the founders. Why? Because those particular kind of stocks, basically they have 10 votes every single stock, okay? So basically what happens is that with just this stock, they have the majority of the votes, okay, in the company. So they have the control of the company just by owning 6.75% of it, okay? So the founders. Google Class A are basically normal shares. You have just one share, one vote, okay? And Google Class C, GOOG, you have one share and 0 vote, okay? So just to make you understand the thing, we can buy this or this. Now, usually in terms of, and ideally, the price of this one should be a little bit higher than the price of this one. Why? Because this one you can vote and this one you don't have voting rights. Anyway, it looks like that the market doesn't really care about that, so I'm not gonna consider it, okay? It's just something that it should be like that, but when it comes to Google, the difference is like not even $1, okay? So it doesn't make sense to consider it. But anyway, now you know why you find two different kinds of Google stocks, okay? Alphabet stocks. Google, GOOGL, and GOOG. Now you know the difference. Anyway, as overall, we have 687.28 million shares, okay? Now let's go with the valuation, and we can see we have previous 5 years, and those are the free cash flows. I'm gonna use the free cash flows to equity. So cash flows from operating activities minus capital expenditures, and that's what we have. Those are the previous net incomes when we calculate the ratio, so free cash flows divided by net income, and we get those 5. I'm taking an average of those 5 and I get 118%. I want to be more careful and I take 110%, okay? Those are the revenues. Last 5 years revenue, we had a growth of 22.67, 22.80, 23. Look at how high those growth rates are. And when it comes to net income margins, they are very, very, very near the 21%. Okay, so in fact, I took 21% and I didn't consider this because of those accounting problems that I told you, and it doesn't make any sense, okay? So 21%, it makes sense. Now, when it comes to estimates, those are analysts' estimates, and we go from 2020. There's not gonna grow too much because of this pandemic stuff. The ads business is going down, so they are just gonna make $179.18 billion, okay? Just a growth of below 5%. And for 2021, the analysts' estimates are $203.74 billion, okay? So a growth of 20.4%. Now, here it comes our scenario analysis, because the last 3 years we have to put a growth rate, okay? And I'm gonna start with 13 and I'm going up to 20%. And see what we get. As always, the net income is just this times 21%, and the free cash flows is just the net income times 110%, okay? So let's start with 13% and let's see what we get. When it comes to do the scenario analysis, we take as a requirements, this time all the same. I took discount rate of 9% for Google equity. Okay, not the entire company, just the equity, 9%. Perpetual growth 2.80, which is basically the perpetual growth rate of the economy of the United States of America. Okay, it's a huge company, we cannot put 5%. Let's see what we get with 13. Now, the 2 days company valuation is 969 billion divided by the total amount of shares outstanding. We get a fair price of $1,410.57 per share, okay, with a 13% scenario growth rate. When it comes to the 15% same requirements, we get a today's company valuation of 1 trillion and divided by the total amount of shares outstanding. This is the fair price, okay, 1,477.69. The 17% scenario, we get a fair price of 1,547.10, and with the 20% scenario, same requirements, we get a today's company valuation of 1,137,000,000 and divided by the total amount of shares outstanding, we get a fair price of $1,655.59. When it comes to the free cash flow yields valuation, here we are. I took 2021 estimates in free cash flows divided by the total amount of shares outstanding. We get the estimated free cash flows per shares, which are 68.48, divided by the free cash flow average yield of the last 5 years, which is 3.40%. We get a fair price in 2021 of $2,014. We have to push it back to 2020, so we discount it back at a 9%, and we get $1,769, okay, as a fair price. We take an average of all those things, and we get 1,572.15 as a fair price for Google stock, okay? So when we go to see in the stock market, we have that today Google is trading around $1,441, meaning that the company is basically trading at a fair price. It's a little bit undervalued, and so if you believe in the company and you want to buy, it's the right price to pay. If, I don't know, we are gonna have a pullback, which is pretty unlikely in those kind of stocks, anyway, it would be, of course, a nice opportunity to buy it. Remember, the only problem with this company is not bankruptcy, is not all those things, it's how much can it continue to grow, okay, at which rate, because this is what investors are looking at. So I hope you find this video interesting. Leave me a like and leave me a comment. Tell me if you own Google stock and what you think. And subscribe to the channel so you don't miss out on news updates and analysis. And have a wonderful day, guys.